Welcome to our beginner's guide on how to trade using support and resistance levels. Now, understanding these key concepts is essential for understanding how to be a successful trader. So let's dive right in. So, first, what are support and resistance levels? Well, think of them as invisible lines on your trading chart that indicate areas where the price of an asset is likely to bounce back or likely to face obstacles. Now, the support level is the lower boundary where buying pressure outweighs selling pressure, preventing the price from falling further. It acts as a floor for the asset's price. The resistance level, on the other hand, is the upper boundary where selling pressure dominates and prevents the price from rising higher. It acts as a ceiling for the asset's price. Now, let's see how we can use these levels to make trading decisions. When the price approaches a support level, it may be a good time to consider buying the asset, as chances are it will reverse its downward trend and rise again. Traders are often setting their stop loss orders just below the support level to manage that risk. Conversely, when the price nears a resistance level, it may be an indication to sell that asset because they're expecting a reversal of the upward trend. Now, traders can set their stop loss orders just above the resistance levels to protect those profits. And remember, when support and resistance levels are not they're not always precise numbers, right? This is not an exact science. It's a roadmap of telling us what the stock may potentially do, but it is not a guarantee that it will do it, right? So again, nothing is guaranteed when we're trading. So support and resistance levels, they can also be zones or ranges, right? So a lot of times it's easier to set your support and resistance and set it as a range. This way, because it's rarely ever a precise number. So it's really important to consider price action and look for additional confirmation signals before you make that trade. Now, additionally, support can turn into resistance and vice versa. When a support level is breached, it often becomes a resistance level, and the same goes for resistance turning into support, right? We call this an SR flip, support resistance flip. Now, to identify these levels, you can use various technical analysis tools, trend lines, moving averages, Fibonacci retracement levels. These are some of the common tools that are used to spot support and resistance. But by combining these tools with other technical indicators and other chart patterns, you can enhance your trading strategy and hopefully increase your chances of success. But keep in mind, you can't use every trading indicator that's out there. Your chart will be messy. You won't be able to read it. The indicators are going to contraindicate each other, right? Pick the few that make sense to you and get good at them. Don't overcomplicate this. That's the key thing. Now, trading uses support and resistance levels, and it's a skill that does require practice and patience. But once you understand these concepts and how to apply them in your analysis, you'll be one step closer to being able to become a consistently profitable trader. All right, let's get into a few charts, and I'm going to show you how we came up with support and resistance. So we're going to start with CLF, Cleveland Cliffs. So CLF, what I have on this chart here, which is a daily chart, by the way, is a declining level of resistance. So it's not a horizontal support and resistance line, it's a declining trend line. But when you flip this to a line chart, you can see 1, 2, 3, 4, 5 areas there where the stock tried to get above this declining level and was not able to do so. And when you put it back on a candle chart, you've got the same areas trying to hit. And this was a failed breakout here, failed breakout there with the wick. And again, consolidation here where it's not been able to get through this declining resistance level going back to November. Then finally on December 1st, boom, big candle breakout. Breaks out above there, rallies up that day. The question is, do we get into the trade that day or do we wait for more confirmation? That's a decision you have to make with your own trading style. But you can see on the next day, it did rally up a little bit higher. They tried to push that stock up to 1858. The bears pulled it back. And then we have a pullback the third day. That is not uncommon, right? Once a stock has a really, really big breakout from a level of resistance or a level of support, it is not uncommon for it to retest, right? To pull back and retest, which is exactly what it did here. So you have this 3-day pullback. Now it's building a base along the rising support line, right? Now this has gone from being resistance to support. This is the SR flip I referred to earlier. So you have this SR flip, and you have it now testing this level of support. So next week, we'll see if it continues to consolidate and test. And if it does, that just improves the chances that if you decide to enter this trade as a long position, right, you now have a bull thesis on the trade. It improves the chances that you will have some success on the trade because it's showing you that it's going to hold this level of support, at least for now. GIS is also one that's on the watch list. General Mills. So with this stock, you've got a level of resistance here, right? You've got a horizontal resistance level here that goes back to September of 2023, right? It spent a good solid week here not able to break above that level of resistance, then had a pullback, came back up, tested it again, failed, pulled back again, came back up, testing it again this week, and failed. So this is on the watch list, but there's no trade there yet, right? We didn't get into this trade yesterday because there was nothing to trade. What we want to see is we want to see GIS break above this level of resistance, thereby turning it into an SR flip. So now this turns into support. And then I would personally like to see it consolidate north of this support line here for a couple of days and show us that it's really going to start respecting this SR flip. And if it does, the nice thing is we've got opportunity. You've got very little resistance between here and the $74, $75 range. So it's a nice trade to the upside if it's able to get above this level of resistance, turn it into support, and start heading north. Other nice thing about GIS is it's got a 3.5% dividend, so could be good for the dividend portfolio. Last but not least is one of everybody's favorite in the tech sector, Amazon. So Amazon has this rising level of resistance here. So it's not a horizontal, but it's been slowly, a trend line that's been rising. Was not able to break above in these two areas. And now it's been hitting its head right here for the past, since November, right? So about half a month. And it's just not able to break above this resistance level. So what we're looking for is to have Amazon become an SR flip, get above this level of resistance, turn it into support, hopefully consolidate a day or two along here and show us that it's going to start respecting that. For me, a bull thesis doesn't actually trigger on this until it gets to 149.13, I think. Yep, 149.13 is actually my alert that I've set, where at 149.13, I'm going to get interested in a bull thesis and a long position for Amazon. And when you take a look at the longer chart here, there's really not a whole lot of resistance till about 159. So you've got a nice opportunity for a $10 move without a lot of resistance in between the 149, 159 area. You do have a little bit of resistance, but major resistance doesn't hit till around 159. So looking to see if Amazon can break this level of resistance, turn it into support, and create an SR flip there that we can then take advantage of. And if not, then it doesn't become a trade. And who knows, maybe we look at it to the downside. So this is how you use support and resistance to start your technical analysis and your trading.